Hello? Hey, everybody. Is everybody here okay? All right, great. Good, so you should be able to see the screen. We're looking at the live markets here. But if you saw the title to today's session, and everyone should be able to hear okay, one thing we haven't done in probably about 2 years is have kind of a just back to basics session. And the last couple sessions, we saw some very basic questions, so I thought it'd be appropriate to have one of those sessions today. So probably go over it for about, I don't know, 20, 30 minutes, and then of course, spend some time on the live market. One thing I want to do, though, before we dive into that lesson, so make today a very lesson day. We've been, in the last many sessions, we've just been focused on live markets and trading opportunities, and so let's make today very lesson focused, but we'll also have time for the live market. Before we dive into that, though, just want you to be aware, we're back, obviously the dollar's back up to our 81.50, right? How many times we've been talking about the 81.50? So watch that, the 81.50 to 82. And there is some room here. If we go down to a smaller time frame and see what we have below, we can see, you know what, there's really not a whole lot of fresh demand until you get down back to about 81. We've got some stuff in here, but none of this would be considered fresh demand. So caution is we're up into the 81.50. There is room for the dollar to drop that down to 81. Okay. Big picture, though, we do have some a couple nice fresh demand zones below current price. And this is the second time we're at the 81.50. We've now gone halfway into it. Remember, we hit it back here, almost hit it here. So longer term, the dollar can certainly go higher than the 82, right? But that's longer term. Now, why might you want to buy dollars? Why is the chart suggesting that longer term dollars might be in demand? Why might that be? What's another market that's kind of where the bigger picture chart is kind of supporting that? Why might people want to exchange their currencies for dollars? As crazy as that sounds, what's another market that's telling you that's likely to happen as well? These are things that really that I really like about trading, is figuring this stuff out big picture too. You know, where's the massive flow of money, you know, going to be? Anybody think of the other market? Maybe you don't watch it. Yeah, the bond market, right? So we've got some supply above in the bond market. There's room below, right? Bond prices falling means interest rates higher. Money's always going to chase higher rates of return. So when you look at the big picture dollar chart, the big picture bond chart, that's what's setting up. Again, not today or tomorrow, but for the longer term, right? We've got these demand zones down here. Anyway, something to think about. Okay, let's move on with our lesson because we always run out of time. Okay, what is the goal of you know, if you're going to speculate in the financial markets, the Forex markets, for short-term income, long-term wealth, you know, how are you going to do that, right? You need to know two things. You need to be very, very good at two things. Number one, where are market prices going to turn? Number two, where are market prices going to go? Those are the two things, right? So how do we figure that out? Well, what causes prices to turn and what causes prices to move? That's the real question. So if we start with the supply-demand curve here, right, and this is nothing new. We've all had this in school growing up, right? But it's important that you understand that this is what's really happening behind the scenes. If we start out on the demand side, obviously as prices fall or decline in any market, demand is increasing. At the same time demand is increasing, what's happening to the supply side in the market? Right? I'm showing you the demand side here, the buy orders. Well, what's happening to the supply side, sell orders, as prices decreasing? Demand is increasing and supply is obviously decreasing, right? So if we were to overlay the supply side over this, it would actually look like these bars over here, right? Until when? So price is going to, price is going to keep falling. What is the only thing that's going to cause prices to stop falling and turn higher? It's when you reach a price level where that last sell order is filled and you have a significant amount of buy orders, demand. That's the ultimate imbalance, right? Lots of demand, zero supply. Price is always going to turn higher at that price point. Now, turns higher, where's it going to go to? It's going to keep moving higher until that same unbalanced equation is present, at whatever price point, until you reach a level where you have either equal or greater supply. Okay. So the goal for us is to really just have this razor-sharp focus on exactly what that picture looks like on a price chart. Okay. Now, if it's that simple, how come everybody doesn't do that or things like that? Well, because everybody's exposed to so much trading information and education out there, it can become challenging. So understand when we get to a price chart, you can all see this, right? When I switch the chart. Okay. And I'm on a pretty high-speed connection here, so there shouldn't be much delay. When we get to a price chart, understand all it is the same supply-demand equation, just flip sideways. Right? Now, here's where one of the big challenges come in. There's many reasons why, most people are unsuccessful when it comes to market speculating. And it's because they have this retail mindset. They don't understand that trading, when looking at a chart, is the same supply-demand equation, just turned sideways. But one of the biggest challenges comes in when you look at the chart, right? So these orders, or these, what I'm showing you over here on the right, okay, the supply and demand, are those filled orders or unfilled orders? Are those trades that have happened yet, or are those willing buyers and willing sellers? I'm saying on the right. These over here, the green and the blue, or the red. Yeah, they're unfilled orders. These are all stacks of buy orders and sell orders that are not filled yet. That's what creates the supply-demand curve. Now, what does the price chart show us? Does the price chart show us filled orders or unfilled orders? Or what are the candlesticks or bars or lines or whatever represent? Yeah, filled orders. So now the big question is, and the only question that matters, what is the only thing responsible for prices turning in a market and moving in a market? Is it filled orders or is it unfilled orders? And make sure you understand this. Yeah, very good. It's unfilled orders. So can everybody see the big challenge? Okay. Not only does the price chart not show us what we need to see, but it actually shows us the opposite picture of what we need to see. And this little, topic that we're on right now for the last 30 seconds is something most traders will never even, think about, but it's a big deal. So what we need to do is be able to look at a price chart that shows us filled orders to figure out where the unfilled orders are. Make sense? I could care less where trades happen. I want to know the price levels where trades couldn't happen and understand that they couldn't happen because there's such a big supply-demand imbalance there. All right, let's move on. Some of you, we're not going to go over this just in case you know what it is. Most of you are not in the mastermind community, but this is a supply-demand grid we come out with every day that represents the unfilled buy and sell orders, where banks buying and selling. Let's get past that. So in the short time we have together today, how can I convey this concept to you in a way you can start to understand it and start to apply it? Well, let's go to a price chart again. And this is kind of a back to basics session for those that are new to the sessions. The two things that we can go over to help get you start understanding this. Number one, understanding what that picture looks like, the supply-demand picture, right, which is where market prices turn. And then number two, understanding who is on the other side of your trade. I'll explain that in a minute. But back to number one. It's not just understanding. We need to understand, or you need to be able to identify what real supply and demand levels look like on a price chart for two reasons. One, so you can understand where those orders are, where banks are buying and selling, because that's where prices turn. But once you can identify where those levels are, you can equally identify where those levels are not. And that's just as important, because we need to know where prices are going to turn and where they're going to go. Make sense? And then number two, who is on the other side of your trade? You absolutely have to know who you're trading with. I mean, is it when you push the buy button, is it Barclays Bank on the sell side, or is it some novice retail trader? Wouldn't it be nice to know the difference? Okay, let's go over that here. Okay. So let's start with number one. What does supply and demand look like on the chart? Okay, and I want to take this concept a little bit deeper. And I'm talking a little fast due to, I know a lot of you have heard this before, some of you have not, and also we don't have too much time. So, and I want to get to the live market. And of course, after this, if you have questions and stuff, you can certainly send an email or what have you. So, supply and demand. Prices are trading sideways right up here where I'm pointing. Supply and demand appears to be in balance, right? However, all of a sudden, there's a decline in price. Once this decline in price happens, now, we're not trying to predict this decline in price. We're not trying to make money during this decline in price. Instead, we let it happen. Because once it does, that's what tells us that supply exceeds demand up here. And we have a supply-demand imbalance. Right here, when prices break out of this area, it happens because the last buy order is filled, and you still have a significant amount of supply. That's going to cause price to fall, always, right? So once we identify that supply zone, we wrap two lines around that level based on a very specific set of rules. And those of you that took that online class with me, you understand what those rules are. Based on a very specific set of rules, and we wrap two lines around that level and carry it forward, creating that supply zone or sell zone. Remember, we want to know where banks are selling in this market, and we carry it forward. Another word for supply, retail prices. Down at the bottom, just the opposite is true. Prices are trading sideways. All of a sudden, there's a strong rally in price. Once that rally happens, that's when we can say, aha, we now know where the real willing buyers are in this market, where objectively demand exceeds supply, right? So again, based on the very specific set of rules, we wrap two lines around that level, carry that level forward, creating that demand zone or buy zone. Another word for demand, wholesale prices. We're just scratching the surface of supply and demand. Moving on to step number two, you need to know who you're trading with. Any successful business that buys and sells things, such as Walmart, Costco, Goldman Sachs, JP Morgan, Barclays, Bank of America, Sam's Club, they're all the same company. They buy things at wholesale prices and they sell them at retail prices, right? What's the big difference between Goldman Sachs and Walmart? What is the only difference? What's the difference between those two companies? Someone tell me what the big difference is between Goldman Sachs and Walmart. One thing. That's funny, Ara. That's funny. He says Walmart sells useful stuff. Yeah, exactly, John. So, John, you get the prize. Product. That's the only difference. It's just the product. Other than that, they're the exact same company. Okay? One buys and sells the plastic and toothpaste and stuff and at wholesale and marks it up and sells it to us at retail prices. Goldman Sachs gets the stocks and bonds at wholesale prices and marks it up and sells it to the public at retail prices. Right? Same thing. They're both good at that concept and they're both good at marketing. Same company. Okay? So you need, when it comes to putting your hard-earned money at risk in the market and trading, you need to be Costco and Walmart and Goldman Sachs. You need to, you can't be the retail buyer. So just like those companies, you need to understand your customers very well. You need to understand the people that are coming into your store, what's going to make them buy at the prices you're selling at, right? Just like, you need to be able to find the wholesale people that are going to sell to you at wholesale prices and buy from you at retail prices. Okay, you need to be able to identify that. So what do those people look like on a price chart? How do we see them on a price chart? Well, the retail novice trader who is not profitable consistently and consistently makes wrong choices that lead to losses or what have you, always makes two mistakes in the market. Let's go here. Let's focus specifically on the buyers, right where I'm pointing up here. If we look at this group of traders up here, there's buyers and sellers up here, but if we focus on the buyers, these are the buyers you want to learn to sell to. You want to learn to identify these buyers and sell to them. The characteristics that these buyers share are two things. Number one, they're buying after a rally in price. Okay? You would never do, a smart buyer and seller of anything would never wait for prices to rally and then buy. These buyers up here are doing that. Okay. Mistake number two that these buyers are making, they're buying right into a price level where the chart already told us supply exceeds demand. And I like the way some of you are kind of typing in. I don't want you to think I'm ignoring you, but you can tell the people that have been with the group for a while. You can see they're typing in, euro, identical chart pattern right now, or bond chart pattern, same right now. So it's good that you're, kind of recognizing this stuff. And we'll take a look at the live markets in just about 10 minutes. So the two mistakes that these buyers are making, they're buying after rallying price, and we're right into a price level where the chart already told us banks are selling, supply exceeds demand. Instead of being that novice buyer up here at retail prices, we want to be the seller, just like Walmart and Goldman Sachs. Prices fall as we would expect, and down here, if we focus on the sellers, it's that same group of novice market speculators making those same two mistakes. Here they're selling after a drop in price and into a price level where demand exceeds supply. So instead of being that novice seller, we want to be the buyer. Now, the trading books, here's another reason why most people lose money. Because they learn to trade by reading trading books. And the trading books say don't buy here, where I'm pointing to, and where I'm suggesting you buy. Instead, don't buy here, they say, because you don't know if there's any buyers yet. Wait for confirmation of a green candle, and then buy. Well, if we wait for that confirmation, what's now happened to our risk? Has it gone up or has it gone down? It's gone up. What about a reward or profit zone? Has it gone up or down? Yeah, it's gone down, right? Would Goldman Sachs or Walmart or Costco ever buy up here? Of course not. They're getting ready to sell to us, okay? You've got to be the bank when you're putting your hard-earned money at risk in the market. And that means learning to trade like a bank, learning to see the markets like a bank, acting, thinking, sleeping, breathing like a bank. You should be waking up in the morning dreaming about bank activity. No, I'm just kidding. But, well, let's move on. Okay. So here is, again, just some examples of how we do this. Let's look at two examples, and then we'll dive into the market. So here on our supply and demand grid, just want to share with you kind of how this works. We identified where banks were buying, this happens to be gold, and where banks were selling gold. Okay. Here's what the chart looked like. Now, how were we so certain that banks were selling gold up here? Okay. Well, prices were trading here for a very short period of time, and then price collapsed away. As you know, we have these things called odds enhancers. These are all clues as to where banks are buying and selling in the market. We certainly don't have time to go over all of them or even half of them, but let's go over a couple. You might look at this and say, well, how can that be such a good supply level? How do we know there's so many unfilled sell orders there? Because price is only there for a short period of time. That's why. That's why we that tells us it's a strong supply level. The fact that price was only able to trade there for a short period of time, it tells us there's a big supply-demand imbalance. Okay? The greater the supply-demand imbalance at a price level, the more out of balance supply and demand is at that price level. Does that make sense? In other words, at your strongest levels, you're going to get the least amount of trading activity. Now, if you think that through, it's another reason why most people lose money. When most people incorporate, now in the spot FX, we're not going to do this, but in other markets, most people incorporate volume into their decision-making process. We don't want to do that. And when they incorporate volume, they look for high volume activities, areas where there's many candles on the screen. Even in spot FX, I see people all the time sending in charts saying, this must be a great level. Look at all the candles and look at all the activity at this level. No, that's actually the opposite picture, right? Right, yeah. Most are, they're all high level and then obviously taken deeper in the XLTs. But anyway, now notice how price dropped away from that level, okay? Nice strong drop in price. So again, another odds enhancer. The stronger the move in price away from an area, the more out of balance supply and demand is at the area. Okay. So again, this is just selling at retail prices, buying at wholesale prices. Okay. Just like any profitable buyer and seller of anything would. Here's a short-term income trade we took in the program last month. Again, this is in the XLT. We had this is an equity index market. After this, we'll go into the live market. Okay. We had a gap up in price that day into a predetermined supply zone. Now, you can't see the supply zone here, but if you go down to a smaller time frame, there were two nice levels on top of each other. Okay, so we just combined them into one level. So so there was some good news for the stock market that day. The Nasdaq gapped up because all that demand was coming into the market due to the good news. So that's going to cause the retail public to come in and buy. While there were so many buy orders coming in that day that the market couldn't open at the prior day's close because there weren't enough sell orders there to fill the buy orders coming in. So the market gaps up only because there's so much demand. It's going to gap up until it reaches a price level where you can start filling those orders. Well, where's that always going to be? Not sometimes, but where's that always going to be? I can't tell you how many emails I get that say, wow, the market always gaps into these levels. Well, it has to. Okay? A gap up is always going to be a gap up into what's going to, prices are going to open on a gap up where the sell orders are, right? So the orders can be matched. When there's a gap down in any market, even in the FX markets on Sundays, right? If there's a gap down, you're going to open up into a demand level, right? It has to. It's all order matching, right? So now all that good news is out. Everybody's, all these retail buy orders are coming in. Price gaps up to find the sell orders. Obviously, it's going to be in our supply zone. That's what we're looking for. Now the order matching is going on, right? Orders are being, filled. Now the last retail buy order is filled, right, at our price level where the chart already told us supply exceeds demand. What's the next move in price? Someone tell me. Obviously, you're looking at the chart. It's down. Down to where, Ruben? Where's it going to move to next? Demand. Yes, right? Okay. It has to. Isn't that what happens every day in every market? Now, again, I don't want to make this sound easy or too easy because really, if it is this simple, how come everybody's not making money? Well, it's because most people are. What is the retail public doing at or near the open on this day? Are they buying or selling? Okay. Remember, everybody's trained from a very young age to take the opposite action in the market that you should. They're buying on the good news, selling on the bad news. And nowhere is news more prevalent and more powerful as far as perceptions go than the FX market. It's no coincidence that you see, that we probably see, there's a lot of people that struggle trading FX. And there's a correlation there between, that and the fact that they're so focused on the news. If you could stop focusing on the news so much in the FX market and start thinking like the FX bank does, you can, things should work out much better. All right, what market do you want to look at? We've got some time left. We're into the live markets here. I wanted to start the session with that kind of back to basics review. Hopefully that was helpful. Let's go into the live markets now and start applying this. Someone said there was a setup in Euro. Let's just see if there is. Yeah, we can go to spot. Let's see here. Whoops. So there's a nice level we found in FX Street. I don't know if anybody's still in that trade. And then remember we said if you not that one. Yeah, let me go to the spot. So in the larger time frame, there's a great level above. Remember, we've been pretty bearish the euro. Why have we been bearish the euro? Someone remind us. Why have we been so bearish the euro? Remember, it hasn't been because there's just this amazing supply above, which there is great supply now, but what's the other reason? Remember, we identified it. The lack of demand below, right? Yeah, the dollar had room to rally, but remember what we talked about last time in the euro. There's nothing to stop the euro from falling and turning. There's little pockets of demand, but no significant. It's not like there's an 81.50 in the dollar, right? So we'll remain bearish on euro, especially since now we've got some more supply levels. Let's put those in big picture. That. Tom says Putin. All right. Okay, so we've got a couple fresh levels above on a very significant time frame. Again, how many times do you get, quality levels like this on a daily chart? Okay, that's why those dollar levels, you've noticed over the last few years, every one of those dollar levels we find ends up being a huge turning point. We always look at the daily. Okay, it's always the daily we're looking at. We're looking at it, I'm saying for the dollar. Same thing on the euro now. It's got beautiful fresh levels on the daily, on the supply side. Okay? And really, no fresh demand below. You might have a little demand left over here because you kind of barely touched this level and turn. All right. But anyway, so if we should happen, if the dollar does fall from the 81.50 again, remember it's the second time up there, and the euro rallies. Okay, so watch, if I put this chart here, and these charts really have to be correlated because they are. So obviously these supply levels on the euro, on the daily euro, are going to line up with some demand here on the dollar, right? As we said, this dollar supply is not fresh anymore. In fact, we've gone about halfway into it this time. And there's still no fresh demand anywhere close in the euro. So we'll have to wait for a rally above the 134.50, but it's right up there, not that far. We could be there pretty quick. Okay, so watch for that. And yeah, someone pointed out a setup here in euro. yeah, so we just, we had a nice little bounce off this demand. Let's go to a smaller time frame now and see if we can find, where's the next turn and trade in the euro. Let's see if we can find that here. So I'm down to a pretty small time frame. Let me go a little bit bigger. Let's see if we can find something, some quality here. The next area where you're probably, and this is not a great level, but down in here. Yeah, I agree, Ruben. Nothing great in the picture we're looking at, but you're probably going to get a little bounce down here. All right. Base, strong rally out of that level. So we can get a little more history in here. So nice, strong drop, base, rally. Right here. Look at the strong rally out of there. Very little trading activity down here. When price was down here, it couldn't stay there very long. Why? Because there's probably quite a bit of banks are buying down here. Lots of unfilled orders. And also it's fresh, another key odds enhancer, which means there's been no pullbacks yet. The nearest fresh supply zone above current price is going to be right here. Yep, yeah, that one right up here, yeah. So when it comes to fresh levels, where's the first fresh supply and demand zone, above and below current price in the spot euro? There you go. So retail prices up here, wholesale prices down here, and that's that. Okay. And remember, step number 2. If prices do rally up to this area and we sell short up here, who are you selling to? You'll be selling to someone who's buying after a big rally in price and into a price level where the chart is suggesting banks are selling. Now, whoever was selling up here, did they sell all they wanted to sell? Did they fill all their orders? No, right? And we know that for a fact, because if put it this way, if supply and demand were equal up here, if there was equilibrium, an equal amount of supply and demand up here, wouldn't prices just keep trading sideways? They would, but they couldn't. Why? Too much supply. All right. Let's move on. Next market, I think someone wanted to look at gold. Another market that we've been just extremely bearish now for probably this feels like a couple of years. And we're going to stay bearish probably until that, well, we'll start with this chart. Hey, Sean. Hey, Dan. How you doing, Dan? Good to see you. So we've got a nice big target on gold of just about 1,000. I know that sounds crazy, but we've been saying that since we were trading up around 1,800, so we're a lot closer now. The main reason is there's just no fresh demand below current price to stop that from falling. Joe, which chart though are you talking about? Which market, I should say? I see your inverse post there. Gold. Yeah, no, good point. So, got it. So, it just kind of, yeah, so kind of an inverse head and shoulders forming up here, right? Which is great because people that, and I'm not saying that you, but that's what makes our strategy work so well, right? Obviously, we're thinking short for a while now and on these rallies into supply. But for the people that learn to trade by just reading trading books, they're not going to start shorting until, you probably break, whoops, let me do that. So if you put a neckline in here for, I'm probably not going to draw this right, but something like that. So the people that are trained to look for head and shoulders patterns, they're going to short a break below this line, which is exactly what we want because we're short from supply. So we want that novice retail crowd to come in and sell after we sold. Make sense? Ruben, yeah, looks like a great level. So we'll see. Oh yeah, Joe, you can almost look at it both ways, right? That's pretty funny, but you can. Okay, let's go to a smaller time frame chart. I'll get rid of some of these old lines here. Yeah, so let me bring this up a little bit, and let's do the same thing we just did in Euro. The problem is you don't have really any good fresh levels close to current price. So I think we'll probably move on from gold. In other words, not a whole lot to do right now. You're in the middle of all this. You're kind of in the middle of this big range. So you're not going to find a lot of great opportunity there. One FX, no, rally-based drop, drop-based rally, those are always going to be far out on the curve. So those in and of themselves are fine. Okay. I want to shoot over the Aussie dollar real quick. That was a fantastic level and trade right there. We missed that one. Let me blow this up. See if we can find something. Let's look below current price. I want to see below the 92.40. Let's see if we can find anything back here. No. We'll stay away from Aussie for now, too. A lot of these markets are kind of in the middle of moves, but why don't we go over to the S&P? And let's take a look there. Get some of these old lines. And let's see if we have any small time frame levels we can see advantage of. I know the NASDAQ just hit one of our key levels a little bit ago and fell. That level's going to be used up. Well, let's go down to a smaller time frame and see what we have here. Let's see. Yeah, no, the S&P already turned at that level. The really good short-term income levels for today, the NASDAQ and S&P hit them. I can show you what they are if you want. I actually took the NASDAQ. Anybody short the NASDAQ this morning? There's a really nice level in there. Hey, Boyke's with us. Here we go. Here's one in the yen. So this one looks pretty good. So larger time frame, but this is not far from current price. We come down to this level right here in the yen. So we're looking at the yen futures now. You can certainly find the same level in the spot. So 97.50. Well, let's make sure. That's going to be a little too tight. So right around 97.52 in the futures. The bottom of that level is about 10 ticks lower. Call it 97.42. So you need to stop about 39 or 40. So not bad. When you're on this kind of time frame, and you only have to risk 10 ticks or pips or so, depending on what you're trading. That's not bad at all. And the fact that the market went all the way up to this level right here. Okay, so that's telling us, you know what? So far, this is the extent of our profit zone. So we've got this on. Well, let me actually make this the stop. Stop down there. The fact that price got all the way up to here tells us there can't be any significant supply until this price or higher. In other words, there can't be any significant supply below this, right? Otherwise, price never would have got there. So if that price is 98.28, well, let's get out before that. So if we know there's competition to sell at 97 or 98.28, let's get out before that competition if we're selling. We don't want to sell with competition to sell. We want to sell when there's still competition to buy. All right. In other words, we want to find the quality trading opportunity and then go for the easy money. And when I say that, I don't mean to say the trading is easy or anything, but in other words, if the opportunity is to 98.28, achieving 98.20 is going to be easier. So here's the opportunity, right? Here's the easier money. Make sense? Let's see. I see your question there. You asked about 97.90. On this chart, no. And even over here, if you look at the 60, we've kind of already been to that 90. So, right, so you see it over here in the left corner. We've been to that 90 just a couple hours ago, and when price was trading in this range, notice it went all the way up to here, see this wick? That's another clue that there can't be too much supply in here. If there was, you never would have traded all the way up to here. It's like if the ceiling's that strong, you know, you're not gonna poke holes through it. No, I never use moving averages. We never do that. Only because, again, moving averages, like other tools like that, they're all lag price. They're just derivatives of price, right? They're only going to do what price has already done. So we would never want to add a tool to our decision-making process that lags price, because all that's going to do is increase risk and decrease profit zone. Yeah, Sean, I'll take a look. And there's my email address, sseiden@tradingacademy.com. Yeah, I'll definitely take a look, Sean. I think I saw one the other day. So there's my email address. I know I wanted to get quite a bit out today, and then we went through a lot of the stuff quick. Wanted to do kind of a back to basics, and start to apply this stuff in the live markets. Our next session, we'll go back to doing kind of a lot of what we normally do, which is just more application of core strategy. If you have any questions, shoot me an email, and we'll see you next time. All right, thanks.